March was full of real estate madness. Tune in to get caught up. Well, welcome back to another Calgary real estate market update with us here at Redline Real Estate, here on Redline TV. My name is Darren Langille and I am one of the founders here at Redline, and I'm your host for these monthly market updates series. In this video, I will discuss the key items that you need to know about the market data that was just released from March 2021. And at the end, as always, I'll give you a few bits of thoughts about how I see all of this playing out for both buyers and sellers. So let's dig right in. Well, last month, if there were any doubters out there about whether or not the Calgary and area real estate market would have the ability to keep up its feverish pace, I think this month may have crushed them all. As you can see by this graph of the March sales figures for the last 15 years, what you'll notice is that our most recent month blew past both 2013 sales numbers. The only March on record, or Marches on record, that we didn't beat this year were our biggest peak, which was 2006 and 2007. Truly an incredible pace that continues to shake the heads of many. The second part that makes the sales story so impressive this month is the change that we've had from February to March. In February, I recorded with you last month that we sold 1,855 homes, which was very strong. But now we've increased this by over 1,000 homes sold, bringing our total for March up to a whopping 2,903. This is a 56% increase month over month. Historically, we would normally see this trend by 20 or 30%, not over 50. So what's next for us? Is this the peak of the year, or are we going higher? Here is one thing about that. The only time in our selling history as a city we recorded 2 months in a row of sales of over 2,800 was back in that 06-07 years. We didn't do it in our last run-up during 12, 13, and 14. Now, I tell you all this to put what is happening right now in real context so that we can all wrap our heads around the real pace. This is near uncharted waters, especially with the state of our economy, the current and continued pandemic, the unemployment around here, and more. On top of this happened in a month where the oil and gas price didn't even increase, which you might think it did. At present, the last 20 days of the month have shown an average sales per day number of over 90, which, as I'm recording this on the 1st, we ended the last week of the month at 105. Now, time's gonna tell how long this demand will continue. Okay, the stage is set now with our most impressive sales results, but let's now shift gears over and talk about the inventory story. Now, as you'll see by this simple inventory graph, we started the month with 4,563 homes on the market. Now, we sit here now with 5,418. This is an increase of about 850. So what is this telling us? Well, despite that incredible continued sales momentum, we are still building inventory. We are adding and increasing the overall active inventory that is available for purchase. We have seen a listing per day total start at the month at 126 and then climb as high as 147 listings per day as a weekly average. And then now we finish the month back at 139. As we finish the month, we find ourselves with 445 less homes on the market than we did at this same time last year. Now, I'm sure you remember this. This is when things started to pull back in our market due to that state of emergency that was just a few weeks back in 2020. As this graph shows, when comparing to the last 15 years again, we're sitting near the middle side of overall inventory, not on that extremely low side that other markets are having. This will keep the market in check, and if it continues, we won't flip into fully red hot territory. Now, with that being said, let's shift over to the pricing picture. Now, this recent surge in sales volume has put upwards pressure on the market that we really haven't experienced since going all the way back to 2013 or 14. Last month, we discussed that year over year, we were seeing between a 1 and a 5% positive appreciation across the various property types when talking about our benchmark sales price. This month, well, yeah, it continued that trend upwards once again. Comparing March 2021 over March 2020, we saw a year-over-year increase of 7%. This is the single biggest bump in values we've had dating back to that run-up in 2013 and 14. Now, this is shown by the graph is different across districts once again, and it's different across property types. The detached market saw a year-over-year price gain of 8%. The row home market saw a 3% bump in its benchmark sales price. The semi-detached market, it grew by 6%. And then the apartment market, it again did grow with an improvement of 3%. So it's safe to say all systems are a go right now. It's a welcome benefit for all the homeowners who have seen nothing but a 4 and 5 year slow decline in their values. Now with this gain, we've erased all the price declines going back a whole 2.5 years. And now we find ourselves at an overall price equal to mid-2018. This is a positive market recovery news story. Okay, well now you've heard the high level information about the sales summary, the inventory story, and then finally that pricing picture. Let's switch gears so I can tell you what this really means. In this section, I'll pull up just a few extra graphs and some of my own analysis that I conduct on my own to present what I feel completes the whole story. So it's one thing to talk about sales, inventory, prices independently, as I just did, to provide you that color to the story. But let me talk about how they all end up working together. To me, that requires us to talk about two major things. Number one is the sales to listings ratio. Number two is the months of supply. These tell us if the market is tightening up and starting to push further into seller's market territory, or things might be loosening up and then further maybe moving to more of a balance from what we're calling a hot market. Let's first show the sales to new listings ratio graph just for March. So what do you see? Well, we started the month at a 60% number. This, if you can remember, I was saying was a very healthy market, but I wouldn't consider it red hot like the papers were discussing. We've now crept throughout the month and we hit up nearly a peak at about 80%. And as we sit here on the first, when I record this, at 75. This means that 3 out of every 4 new listings are getting sold. This is no longer balanced. This has us fully in seller's market. If you've been listening to me in these updates for a while, I always say, but this isn't the same for all market types. Well, this month, it's pretty darn close. Detached, we saw a sales to listing ratio of 82%. Row houses, 78%. Semi-detached, 83% once again. And then the sole point of difference was the apartment market with the sales to listings ratio of 50%. Now the second item is months of supply. When you look at this graph, you'll see the number has trended slightly lower. We started the month at 2.03, we ended it at 1.8. This means that it will take slightly less time to fully sell through all of that active inventory than it would have 1 month ago. The property by property type breakdown is as follows. Detached, the fastest moving market, has a months of supply of 1.17. Row homes, 2.2. The semi-detached market, 1.6. And then our slowest paced market is the apartments at 4.02. All market pace, though, has increased throughout the month. This is all data showing us that we're still in a tightening market. A tighter market will mean a few things for us. Number one, a sales to list price ratio will get closer to list price. Number two, days on market will continue to drop. March, for instance, is now down to 35 from 52 last year. And number three, well, prices will continue to push higher. Now, as mentioned in my earlier update on pricing, it's not likely we will see more than a couple months of sales at this high of a level. It's only been done that one time in our entire history. The new listings per day easing that has happened recently, and the fact that our last week of March is now at the highest sales per week of the year, will likely play into the fact that our market will get tighter before it loosens. Now, I also mentioned earlier that we will eclipse the total active inventory that we had last year in the coming week. And our seasonal peak of inventory levels should extend ahead for the next 3 months. So in summary, we know it's hot out there right now. It's because the demand is pushing sales quite closely to the new level of inventory that is hitting the market. That makes it hot. It's very likely we are near peak sales figures, but honestly, who really knows? We are just upcoming on the typical season for which we would expect the most sold and the most new property to hit the market. Will this happen? Are there really that many more homeowners able to sell, want to sell, and are coming to provide more supply for all of this demand? I don't believe anybody really knows what this presumed busy season that we just find ourselves upon will turn out like. As always, what I do know is I'll be watching things by the day and reporting to you guys each month with the most accurate picture of our market for you to make those buying and selling decisions, or to simply provide you some peace of mind and some understanding of what is going on with our house values. So that is about it. Thank you once again for watching another market update video with us here at Redline Real Estate on Redline TV. If you have any specific questions about your property type, your price range, or just in general, please don't hesitate to reach out. And again, I ask you, make sure to subscribe, hit that notification bell so nothing's missed. See you next time.